let's look at gifts. A gift is a voluntary transfer of an item from one person to another. For you to call it a gift, it should have a modest value, but also it should be voluntary. There is no legal obligation of the receiver to get this gift. As well, there is no legal obligation of the giver to give out this gift, if you are to call it a gift. 2, this gift is not considered income or is not taxable as such simply because it doesn't bear the characteristics of an income. Where there is no claim or right to receive this gift, then it's just a voluntary transfer. The relationship between the giver and the recipient matters here. Where the recipient considers him or herself entitled to the gift, then that changes the meaning from just a gift to an income. That's why we look at the difference, we look at the intention, we look at the motive, we look at the relationship of these two parties. When you look at Section 21, subsection 1J of the Income Tax Act, talks about exempt incomes. And that's why we have these things like the gifts, the inheritance, the bequest. When you look at inheritance, the property or items we get during life or after death of somebody are not taxable. And at this point, we say the item, meaning if you obtain property from your parents or from your relatives when they are dead, I would say, this property per se may not be taxed because it is gift, is out of inheritance. But the income generated from this item, for example, you go to rentals, okay, you have your building, but the income, the rental income that is generated from this particular property is taxable. That is the difference. Then, why I would differentiate a gift from a donation? For a donation is done for charitable purposes. Therefore, you can claim the donations that you give out in terms of charity, but you cannot claim the gift. So, understanding the difference between a gift, a donation, then inheritance is key because it drives the meaning and it also creates the basis of taxation. Thank you.